Well, we thought the Q2 numbers were honestly kind of a mixed bag. On the positives, daily active users coming in at 1.97 billion. We like that number. The ad impressions coming in at 15%, also better than expected. But there were some notable negatives. The average price per ad was down about 14%. So that's actually much worse than expected. The EPS miss and the revenue miss we expected, to be honest. We did notice that the company purchased fewer shares in Q2 than in Q1, from 9 billion down to 5 billion. So we think it was a mixed bag, but the Q3 guidance was really what concerned us. Quite a bit of a decline from estimates. So that's something that would be something that we would be monitoring for this quarter.
Let me ask you this. Why do you own this stock? What's the reasoning behind it?
I think there's a couple of reasons. One, it's a cheap stock. If you look at the valuations of Meta, from a price to sales, price to book, forward guidance, forward PE, we're about 2 standard deviations below average. So given the potential for growth in the company relative to its valuations, we think it's a very attractive stock at this point.
Yeah, I mean, do you have to put yourself in a frame of mind that I'm willing to own it because it's cheap for all the reasons you said, but at the same time acknowledge the fact that the company's best growth days may be behind it? Do you think about that?
We do. We think let's just say the family of apps business will continue to be a good business. I think the catalyst for Facebook going forward, for Meta going forward, if you will, is going to be the Reels business, which is basically their competition to TikTok. We do think that's a potential catalyst for the shares. And also, we think the Reality Labs business, it's in its infancy, if you will, at this moment in time. But in the future, we do see quite a bit of catalysts there as well.
Yeah, we'll see what happens on the call. As we said, it's not far away. In fact, about 20 seconds until it begins. We'll talk to you soon. King, I appreciate it.